Morning, Steve Reed in Chicago with the morning grain comments. Well, the U.S. presidential election is over and Obama was re-elected. Kind of a mixed reaction, seeing that the dollar's a little higher and most commodities are a little lower. So we'll see if there's any follow-through on that. Yesterday there were some rumors floating around that the rally in all the commodity markets was some hedge funds who were buying into the fact that if Obama was re-elected, that the QE stimulus policy would continue, that he would spend out of the U.S. economic problem, and that the higher tax revenues would offer some positiveness to the U.S. economy. So we'll see now if the Republicans in Washington meet the president halfway over the concern about the economy and avoid any problems that could suggest going over the fiscal cliff. That'll be a pretty important issue as far as the commodity markets are concerned. Now the focus in the grains will turn towards Friday's USDA crop report. Overnight beans are down about 8 cents, corn's unchanged, and wheat's up about a nickel. Each commodity has its own group of fundamentals. In the beans, I think the market still expects on Friday USDA to raise the soybean crop, which could raise the carryout. We're also seeing a little bit better improvement in South American weather and maybe a shift in Argentina to more bean acres because of the wet spring. In the corn market, we're kind of stuck in the middle between firming cash basis levels. World prices have rallied enough that U.S. is now competitive, or at least close to being competitive in the corn export market. And we're just not seeing a lot of farmers selling, versus already thoughts that next year's corn crop, assuming normal weather, will be big and that the supplies will grow and eventually prices will go lower. In the wheat, we're competitive in the world, and there is less wheat available out of the Ukraine and Black Sea and Russia. There's less wheat available out of Australia. Could be less quality wheat out of Argentina. And maybe more of the same as far as U.S. dryness across the southern plains. Deferred wheat contracts, especially in Kansas City, are near contract highs. And the Matif yesterday, French wheat futures, made new contract highs. So we've got a mixed bag in the grains going into this November crop report and going into the fall. This time of year, volume tends to slow as we get closer to the holidays, but we think we're going to be watching pretty closely some of the spreads, especially in corn and beans, as we get tighter here in the United States with our supplies, and we'll be watching very closely the U.S. Southern Plains weather conditions, and also just how prices here in the United States match up to world prices, especially in the wheat market. So again, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.
I think there will be some concerns about Fed independence. The purpose to address that, and clearly the Fed really wants to be perceived as independent and doing the right thing each month or each meeting when